Hey everyone, welcome back to Corporate Decoder. Today, SBM T Silver Bow Mining Corp just filed Form 8, and there is a concerning detail about executive compensation that everyone should know. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company granted stock options to its top executives, and while that sounds normal, the devil is in the details that might signal future dilution. This filing is an 8K report, which is a way for companies to tell the public about major events that shareholders should know about right away. Think of it as a press release filed with the SEC, the Securities and Exchange Commission, to make sure everyone has the same information at the same time. Silver Bow Mining Corp, or SBMT as it's traded on the stock market, is a company in the business of mining. They are involved in basic materials, specifically looking at other industrial metals and mining. Recently, news came out that they secured a good amount of money, around $54.6 million, to help with their drilling and mine rehabilitation projects in Montana. They even had their leadership ring the opening bell at the NICE, which is a pretty big deal, and usually signals a company feeling confident or wanting to increase its visibility. The main event in this filing today is about executive compensation, specifically the company's compensation committee, which is a group of directors who oversee how much executives are paid, granted stock options. Stock options give people the right to buy company stock at a set price in the future. This is a common way to incentivize executives to perform well, as their own wealth becomes tied to the company's success. Let's look at the specifics. Wade Black, the Chief Financial Officer, received 15,000 stock options. These options can be used to buy shares at $11.5 each. They are valid for 5 years, meaning he has that long to decide if he wants to exercise them. What is important here is how they vest. Vesting means he earns the right to use these options over time. In this case, 1/3 of the options will become available to him each year on May 19th. Starting in 2027, as long as he is still working for the company. Philip Nickerson, the Vice President of Exploration, got a larger grant of 30,000 stock options. The terms are the same as Mr. Black's, an exercise price of $11.5 per S-hair, a 5-year window, and they also vest over 3 years, with continued service being a condition. Now, why is this potentially interesting and maybe a little concerning? The exercise price is $11.5. This means that for these options to be profitable for the executives, the stock price needs to go above $11.5. When a company's stock is trading at a certain level and they grant options at that same level or even higher, it can signal a few things. It could mean they believe the stock price will significantly increase. However, it can also indicate a future intention to issue more shares. If the stock price stays flat or goes down, these options might not be worth much. But if the stock price goes up, these executives could make a good profit. And importantly, the company might eventually issue new shares to cover these options, which can dilute the ownership stake of existing shareholders. On a related note, the company's common shares are traded on the NICE American, LLC, under the symbol SBMT. This tells us they are a publicly traded company on a major exchange, which is where most investors would buy and sell their stock. The company also indicates that it is an emerging growth company. This is a designation that allows for certain regulatory benefits, like having more time to comply with new accounting standards. Many smaller, rapidly growing companies take advantage of this status. However, it also means they are relatively young or small in terms of their financial history and public reporting. The final part of this filing is about exhibits, which are basically supporting documents. In this case, the most important exhibit is the cover page interactive data file, which is embedded within the document itself. This is a standard practice that makes the filing searchable and easier for computers to read. And finally, we have the signatures. This is where the company officially attests to the accuracy of the information in the report. C. Travis Norgal, the Chief Executive Officer, signed this on May 22, 2026, just a few days after the event occurred on May 19th. So, what is the takeaway here for Silver Bow Mining Corp? They are clearly in a growth phase, evidenced by their recent funding and ringing the NICE bell. The stock options granted to their executives at a $11.5 exercise price are a key point to watch. If the stock price stays below this level, it means the executives are not getting rich from these options without the company's stock performing strongly. But if the stock takes off, it could lead to future dilution for shareholders. Given that they are an emerging growth company, managing this balance between incentivizing leadership and protecting shareholder value is crucial. The risk I am watching is how this compensation structure ultimately impacts the share count and the existing shareholders' percentage of ownership. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. Like, comment, subscribe, and join our Discord. All links in the description.